bit of a surprise live stream. Let's see who can come here today. I know that I haven't published this anywhere, but good to see how many people can get a little bit off the bat. I know it's Saturday, I know it's not the best time to do this, but I thought, well, who gives a crap? Let me just go live and let's see who pops up. Oh, I hope you guys are doing very well. Quite tired, but I think I can spare some good 40 minutes for this. So thank you very much as people come in. I see Poor Man's Investing. How are you? How are you? Do you like the surprise live stream? Decided to make one out of nowhere. Hey, Poor Man's Investing, if you're gonna keep here for a while, just one thing. I'm alone with my daughter today. She's sleeping, so there's a little bit the chance that if she wakes up, I need to wrap it up. So in case that happens, I just drop a note on people on the chat so they're aware of why I'm leaving. I see 4 people here. KB, Poor Man's Investing, obviously. Both here. I see 4 people on the live. I think I'll start in a little bit. Yeah, I decided to make a live, a little bit surprise live stream. I've been struggling still a little bit with coughing, but now it's much better. So I thought, okay, maybe it's good that I make a live and that we can enjoy and discuss a few things. Please interrupt me, ask a few questions. It's always very welcome, but I wanted to give a perfect example of something that I've been, hey man from Chicago, thank you for being here. I wanted to speak about something that I've been talking since Trump was elected back in November, and now it's happening in front of us. And it's good because sometimes we talk a lot about things that are the theoretical field. So when they happen in real time, it's good to point them out so people understand. So one of the things that I've been saying, and you guys must be completely tired of listening to me, is this. China needed desperately to stimulate the economy, very similar to 2017. So 2017, the global M2, the liquidity overall in the world, was mostly driven by China and not so much the US. The US always has a little bit, but China was really the driver. And this time, I was saying China needs to stimulate yesterday. Not today, not tomorrow, yesterday. They need to stimulate urgently, but they couldn't. Why couldn't they? That's the question. Because the dollar was too strong. If they started stimulating, the yuan, the Chinese currency, would lose the peg to the US dollar. And nobody trusts the yuan on itself, not even its allies like Russia. So it would have been a huge mess. So what I said was, I think okay, I see. Thank you guys for joining, Luis as well. So I've been saying Trump will deliver a weaker dollar. A weaker dollar is beneficial to friends and enemies alike, doesn't make a difference. And the dollar coming down is loosening financial conditions, QE style. It's the same, it's a different type of easing. Yeah? So, what I said was, I think Trump will deliver, because he said when he came in, or before he came in during the campaign, the dollar is too strong. We need a weaker dollar. He's getting it. He said, rates are too high. We need lower rates. He's getting them in the bond market. And I said, I don't know if Goku, I will answer in a little second. So I didn't know what's going to be the deal, but I thought the US will give a weaker dollar to China. China will be able to stimulate, and the US will get something in return. I don't know what's going to be. Now, forget about what people from the US and China say about each other in front of the cameras, that's like watching wrestling and thinking it's real, in the sense of, oh, these people really hate each other. No, there's the political, the wrestling, the character, the persona part of politics, and then there's behind the scenes. So what happened? The dollar came down. What did China do this week? Announced the biggest stimulus in their history. What happened in return? $100 billion investment from Taiwan in the US in the semiconductor business, in which Taiwan is king. Number one. Number two, China is slapping very aggressive tariffs against Canada, retaliating, sure, but very, very aggressive tariffs. My feeling, to make the path easy for the US to make a deal with the Canadians. So this is a perfect example of something we've been talking about for months here, and now now you're seeing it play out in the real world. What we had when he was elected, and this goes into the answer to, hey ADP, thank you for being here, and this goes to the question of Goku. What we saw in November and December was very strong, aggressive, short-term tightening of financial conditions. And you ask me, where did you see that? Because the Fed didn't raise rates. The Fed is a small portion on an equation. It's not the end-all, be-all. The Fed can cut rates on the shorter term, and the bonds, the yields, the rates on the longer dated bonds can go up. Actually, that's what happened. As soon as they've started cutting rates, yields have been going up on the longer term. So what happened when during November 5th? The dollar spikes almost to 110, and yields spike almost to 5% at some point. There is tightening of financial conditions. Why stronger economies are struggling? I'll get to that. So you have the dollar spiking, which knocks out everybody, friend and foes, doesn't matter, and you have a spike on yields, which is very restrictive to as a financial condition to the markets. The proof of that, where can I see that? Now you ask me, where can I see that? You can see that as mortgage demand drops like a stone during that time period. And then assets reflect that tightening about 2 months later, January, February, and beginning of March, if you will. So that's why you see crypto coming down. That's why you see stocks coming down. That's why you see. Then, of course, then you insert the reason why. So you say, oh, it's coming down because of that. Oh, it's coming down because of this. It was because there are some tensions here, some tensions over there. It doesn't matter. The news change, but the reality is we follow a pattern of liquidity. What happened in January and February? Those same conditions that tightened aggressively in November and December flipped completely. Yields came down. Good. What happened to mortgage demand? Oh, increased like 20% on a week. That's where you see the real impact of what I'm talking about. So what I'm talking about seems theoretical, but then I like to point you into, here is the example in real life, so you can see it, what I'm talking about, in terms of changes. The dollar comes down. China cannot stimulate. Germany just brought a huge bazooka of fiscal spending that is coming, together with the ECB cutting rates. So all of this will be noticeable, but probably around the second half of March, going into the spring, maybe extending a little bit into the summer. We'll see. It's very early to see. But that's the basis. That's the key. Now, why are most developed economies struggling? They have been struggling for a long time. It's just that the the stock market keeps going up. There's a reason why Trump, Boris Johnson, the lady in Italy, Gilders in the Netherlands, look at the Spanish parties, look at the French revolt, look at some issues in China as well. The real economy has not been doing great because it's extremely burdened by debt. We had inflation because we had a pandemic. We killed supply chains completely. We had a massive conflict in Europe, followed by a massive conflict in the Middle East, followed by central banks giving money hand over fist. You have inflation. What was the mistake of the central banks? They thought that if you raise rates, you fight inflation. You don't. You make it worse. Why? What is interest rates? Interest rates are the cost of money. That's it. If that cost goes up, so if a company can fund itself at 1% and now it needs to fund itself at 5%, who do you think it's the other for? People like you and me. We pay it. But that's not even the biggest issue. The biggest issue is there is too much debt in the system, public and private, to deal with high interest rates. So how do we compensate for those high interest rates? We have bigger deficits. That's it. So Treasury gets the bill to do it. So that's why interest expense in the US and France is now the number 3 item in the budget. There's a reason that over the next 12 months, it will become the number 1 budget item. The reason why 2013, 2017, 2021 are excellent years for crypto is because you have massive amounts of debt that needs to be rolled over and refinanced. That's it. So liquidity comes pouring in to monetize, roll over, refinance, change the name, whatever it needs to be. That debt needs to be moved forward because we cannot afford it right now. And it doesn't matter if you're Japan, if you're the US, if you're the Netherlands, if you're France, if you are Korea, if you are China, doesn't matter. We're all in the same boat. So that's the reason why you see the bull market in crypto going, the maximum year being 2013, 17, and 21 is purely the max liquidity of the cycle happening, the max liquidity of the global debt refinancing cycle of governments. It peaks, the maximum liquidity peaks in those years. So risk assets, particularly crypto, go up the most. That's it. There's no big conspiracy theory. There's no big meetings underneath the mountain trying to figure this out. There's nothing. So what we've seen, for example, in the stock market, particularly in the US, is we retested this week the 200-day moving average and the 50-weekly moving average for the major indices. We retested it. So far, we bounced from it. There's a very good chance, taking into account how the liquidity conditions flipped in January and February, that the worst is done. And can the debt increase forever? It has to end somehow, someday, or not? Yes. The debt is increasing for one simple reason. Population peaked in 2017. Personal consumption and population growth peaked in the West, in particular, peaked mostly in 2007. We were supposed to have a recession in the levels of the Great Depression. The governments refused. They decided to devalue the currency a certain amount per year. Productivity growth doesn't really exist because we should be getting low productivity because the population is aging. And the idea of the smartest people, my feeling, this is purely my opinion, is to bridge the time where all the what are the factors of GDP? Debt growth, population growth, productivity. Productivity was falling because population is getting older. Population is getting older and getting out of the workforce. So these two are dropping. How do you compensate? Debt growth. That's what you saw. Once again, there's no conspiracy theory. It's just how how the financial system works. That's it. And now your question is, but can this increase forever? Can they just keep printing money and increasing debts forever? No, but they don't have to do it forever. What they need is this. They need to bridge this time period of low productivity and aging population until we get to the other part of the cycle, which is population growth and productivity growth, in order for us to grow our way out of the debt problem. So I ask you, is $36 trillion debt a problem? The answer is, it depends. If your GDP is 120 trillion, no. If your GDP is 10 trillion, yes. See the point? Depends. So, but how are you going to do? What's going to cause the population growth and the productivity growth? You got it. AI. AI is infinite population and infinite productivity. We are getting to the point where some of the AI is going 2 and 3 times smarter than, or with the equivalent of the IQ of an Einstein. And this will not stop because this grows exponentially. So I think that's the end game. Can we bridge long enough for AI to make us triple the GDP in 5 or 6 years? If it does, the central banks did something they managed to pull off something very incredible. Now, what is the issue for the average person? The issue for the average person is that they're getting left behind and they don't really understand what's happening. That's why, what is it? The South Korea president's being impeached. Germany just came out of elections. With dollar, wouldn't that increase inflation and weaken the dollar? I can see crypto be the end game here. So the Bitcoin reserve, that's a good point. So the reserve is extremely bullish. Now you ask me, why did the price go down? The price going down for the same issues, liquidity and financial conditions, which are still capturing the period from late last year where those things were dropping. Don't forget, these things have a 60 to 70 day lag. It's not like this. It's not, you move here, that happens. You move there, that's not how it works. It's not a thermostat in your house. Crypto. Why crypto? The strategic reserve is very relevant for 2 simple reasons. Now, people got in their heads that somehow Trump was just going to order, I don't know, the US government to spend $1 trillion buying Bitcoin or something like that. I don't understand. I mean, he doesn't have the power to do it. In order for that to be approved, he needs to bring it to Congress. It's not like he decides, he wakes up tomorrow and he says, oh, this I'm going to spend $1 trillion and nobody can stop it. This is not a kingdom. This is not how it works. What he said was, we're going to make a reserve starting with the confiscated crypto. Why is this bullish? Oh, there was a large amount of crypto here that is now not going to be sold. Okay, that's good. Number 2, oh, it's part of the assets of the government. Do you think the regulator will be friendly or unfriendly? Friendly, right? Another one. The US already has 200k Bitcoin. How much have the other countries? Even if they don't believe in crypto, let's say they have zero belief in crypto. What if the US is right And in 20 years' time, we're going to look back and say, oh, we could have done something. But once again, the US now is going to lead the world for another 50 years because we didn't see it. So now you insert game theory issues. And this applies for friends and enemies alike. Doesn't matter. Then we went from people being afraid that crypto was going to be outlawed to Bitcoin is not going to be outlawed. That to me is extremely bullish. The thing is, people don't realize it because the price is not 150K. When the price is 150K, and it will be, they will go back in time and look at it and say, of course it's going up. Look at what's happening here and there and the other. The way it's going to be funded is this. First, they will move the crypto that's already confiscated into separate specific wallets. That's it. You can then borrow against it, against your assets. Or you can say, hey, this is part of my assets, it's worth $1 trillion, whatever. Then they can buy it as long as tax neutral. So in theory, they can do something like this. Sell gold, buy Bitcoin. You spent no money from your taxpayers, you can actually do it. You can establish a sovereign wealth fund. Did that happen? Oh yeah, they want to do it, right? And you can buy crypto over there. And in case you don't know, BlackRock is pretty much the private wallet of the government. Allegedly, to say allegedly, but just see what happened in Panama Canal. Who bought those ports? Who was involved? It's always the same. So it's up to you to believe it or not. You can believe that in fairy tales, you can believe in whatever. It's all up to you. Now, of course, they can also bring it to Congress and they can say, hey, can you guys approve this? Most likely they're not going to do it because they don't want to deal with the potential for a bear market, which is going to happen because bear markets happen in any assets regardless. But the signal sent by the White House, it's very important for individual states, here's the key, to get their own reserves approved. Because that is much easier. And a state like Texas, you're talking, if it was a country, I think number 8 in terms of GDP. So these are massive states. Arizona, I think, got the first instance already approved. But once again, people are not paying attention because the prices are not 150K. They will pay attention when the prices are 150K, and they will go back in time and say, of course it's 150K. Look at A, B, C, and D, and E. And then they will fail to realize that the things that they are looking at already happened. It's just that we need the liquidity to be on point for these things to be reflected. Now, when it comes to altcoin season, we are starting to be in a position where altcoins have stopped pretty much bleeding against Bitcoin, which is good. Now, there are many theories of why this altcoin season has been so weak. I think there's a big role played by Michael Saylor, for example, who bought huge amounts of Bitcoin that usually that single buyer was not around. But that's fine. You need the macro so the macro sets the board and the chess pieces. And then parts of macro start moving the pieces. And then the winning strategies happen within the overall context of the game you're playing and the setup that you have on your board. See, like the individual moves, you make them. And that's where you see specific altcoins going up, you see Ethereum going up, you see that going up, etc. And of course, let's be honest, we had a black swan with the Bybit hack because that guy sold, or that group sold, $1.5 billion. In 2 weeks, he has nothing left. I've said another thing, which is completely true, and is all on chain, so you can see it. There's about $2.5 billion in short positions for Ethereum around the 3,000 level mark. $2.5 billion. And growing, by the way. I think at the moment maybe closer to 3 billion, which would be around 2 Bybit hacks. If those shorts start to get called because prices are moving up, that's like having 2 reverse Bybit hacks market buying Ethereum. Understand that. So people are really betting that the bear market, or a lot of leverage traders are betting that the bear market is here. And people are redefining bear markets. So they're saying, oh, it's a bear market because Bitcoin sold off 20% plus from the top. So really? So in 2017, we had 5 Bitcoin bear markets. Is that what you're telling me? We all know in crypto what a bear market is. Is when things go down 95%, is when Bitcoin goes down 80%, 75% plus, is when, we know, everybody knows what the bear market is in crypto when you see it. In my opinion, we are not in a bear market at all. And the worst is over, and the worst was predisposed to happen based on what was happening back in November and December. And now you have incredibly bullish things happening that are not getting the attention because prices are down. And then I'm going to give you this example because this stock has been talked about so much that I think it's a perfect example of the state of our mindset nowadays. Tesla. Tesla is down 30% on the year, I think. And everybody's losing their mind. What they forget to tell you is that Tesla is up 45% versus last year. 45% up. Our average return on Tesla is 90% plus per year in the last 5 years. Then we go down 30%. Oh my God! Sell everything! This is the end! The world is over! I mean, I don't know what's happening to this society. Are we expecting that a company is just going to go up 100% every single year? Otherwise, there's something deeply wrong. Really? Of course, we're bullish. At least I am. I see the crypto market in fear and oscillating between fear and extreme fear. I see altcoins the cheapest they've ever been. Literally. I have one big rule that trumps all the other rules. Buy cheap, sell expensive. I would be concerned if liquidity would be dropping and financial conditions being tightening as we enter the lower prices. That's something that you usually see in the bear markets, 2014, 2018, 2022. We are not seeing that at the moment. Maybe we'll see it in the future. I mean, who knows? It's possible. Maybe we're going to see it, and that will obviously mean that something is very, very wrong. At the moment, we haven't seen it. That's my point. And I be cautious with people talking about bear markets because these are the same people. You see, these people, they get paid on YouTube, ad revenue, sponsorships, on Twitter, you name it. They get paid in any case. So they don't mind. They will come up with all these theories, and then it doesn't happen, and they just pretend that they never said anything. So be careful with that, because it can be quite troublesome. Now, I have a question for you, which is this. I think the US. So my question is: do you agree with my statement or with my opinion? I think there's no way where the US doesn't explode liquidity like there's no tomorrow and doesn't debase its currency dramatically in the next 12 months. Here's why. In the next 9 to 12 months, 9 trillion of US debt needs to be rolled over, refinanced, etc. A lot of this debt comes from 2020, where rates were less than 1%. And now they are above 4% for the most part. There are two options. Either rates come down very aggressively for the refinance, or deficit spending will explode to pay for the interest expense. Both of them, doesn't matter what you mean, or why the wealthy benefit. Oh, that's very easy. The wealthy, sorry. So just to conclude, for this huge debt coming, $9 trillion, out of a lot of it comes from 2020 with less than 1% rates. You have two options. Either rates come down aggressively so you can refinance that, or you need to print more money and issue more debt to handle a bigger budget deficit, because interest expense for the treasury will explode. In any case, that means currency debasement. It means more liquidity. It means, or should mean, asset prices go up. I haven't seen how this cannot be the case. It's pure math. Has nothing to do with opinions, has nothing to do with political parties. This would be true, by the way, for if the other party had won. It's the same thing. It's not a partisan issue. Now, the Fed already said, Powell said something. Nobody paid attention to it, but be very careful, because I spoke about this in the past. I said the only thing the Fed needs to do to start printing money is to say they've run their models and they've discovered that all of a sudden 2% inflation doesn't make sense in the modern economy. 4% or 3.5% is actually the real number. The real target for inflation should be 3.5%, 4%. That's it. You just solved your inflation problem. He said in the latest meeting, we are now running a revision of our models, blah, 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 because enough time has passed. So we are now reviewing all our models, our inputs, and we will be disclosing policy adjustments accordingly. Now, translating that to English means, oh crap, we have a lot of that coming that we need to refinance. We need to find a way to lower these rates. That's it. Now, is it going to be by playing with the CPI calculation method to show a lower number? Is it going to be putting a new target for inflation based on the new digital economy? That's anybody's guess. You guess what you want. But I wouldn't be surprised that if some major changes are going to come in which they will affect policy quite a lot. And Neil Kashkari, one of the Fed guys, already said, we have infinite money and we can deploy it at any minute. He already told you. So he's not joking. Now, is the currency going to lose its value? It's a different thing. Now, KB asked me a question. Why does these liquidity increases, etc., benefit the wealthy? It's very simple. When you have banks in the middle as gatekeepers of this liquidity, if you are a person in the bottom 80% of the population and you go there and say, hey, give me a 100K loan because interest rates are 1%, the bank is going to tell you, no, you have 2 mortgages, a personal loan, credit card debt, student debt, and 2 car loans. We're not going to give you any money. Oh, Mr. Elon Musk, you want $100 million? Sure. Or a Mr. top 20% of the population. Do you want X amount of dollars? Depending on the situation, obviously. Sure. Now, what happens with that? Well, let's say I give you $100 million. Are you going to start having 7 dinners, 5 lunches, and drive 8 cars per day? No. You may spend more money on your lunches and dinners, but you're not going to have 7 lunches or dinners. So the CPI inflation, the supermarket type of inflation, you don't quite see it. But what people do with that amount of money is they buy, well, can they buy bonds? No. Gives them no interest. Can they put deposits in the bank? No. What they do? They buy real estate and stocks and crypto. So those things go up. That's it. So where do you see all this liquidity and all this debt growth affecting the middle class? I'll answer you very quickly and very precisely. In the 1960s, you would buy an average home for around 2.5 times your average salary. So you had 2.5 times yearly average salary, would buy an average home. Now you need 10 average salaries to buy average yearly salaries to buy an average home. That's it. You lost 4 times your asset purchasing power. Who owns the assets? The top 20% of population, particularly the top 5, 1%, etc. So that's why politicians focus so much on this group to attack them, whilst in reality they are actually not doing anything bad. It's just they have access to money, they understand what's happening with the currency debasement, and so what they do, they buy assets. It's assets that can keep up with the currency debasement. Where do you see that currency debasement? M2 money supply increases around 8 to 10% per year. How much is the average that the S&P goes up? On average, 8 to 10% per year. That's it. So if you invest in real estate and the S&P, you typically match this currency debasement. Crypto and tech stocks are the only thing that beats it. That's it. By the way, guys, sorry, but I'm hearing on the background my daughter has woken up. I hope that this video was helpful. I would like to thank you all for being here. I really appreciate it. If I missed any of your questions, please drop something in the comment section. As you guys know, I always answer your questions. I hope that you guys enjoyed this video. If you haven't listened to it from the beginning, I encourage you to do so. And I do believe the worst is over and that things are coming back. Goku, I think I answered your question, but if I didn't, I think altcoin season will be coming. The first one, at least, would be coming shortly, around most likely. I mean, I think I had a prediction beginning of the year. Let me see. I think I said April to June or March to May, something like that. Let me see. First altcoin season. Let me see. Yeah, so altcoins around April, May. That's what I see. Where it see BTC to bottom would be, I think we already did at 78. If you mean in the bear market, we'll have to wait and see. Sorry, guys, I really need to go. Thank you very much for your support, guys. I'll catch you in the next one.